following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly source for all the fun info from the world of options. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. I've mentioned on the show previously some of our more recent additions to the network, of course, the wide world of options, and our ever-popular Options News Rundown. I'm very pleased to say we'll be kicking off a very new program tomorrow. That is a futures options program titled TBD, but we're recording the very first sneak preview episode tomorrow. That should be making its way to a podcast provider near you very shortly, so stay tuned for that. If you're into futures options, you're going to love it. If you have questions about futures options, be sure to send them in to us so you can get featured on an upcoming episode of that program. And speaking of people featured on episodes of this program and other programs on the old network, I am joined, as usual, by my typical cavalcade of stars, the usual suspects, the fellow members of my all-star panel, starting off with the man who is closest to me, if proximity, if not by age. He is, of course, the Viceroy, known also as the name Alex Jacobson, over there at Options Express. Alex, welcome back to the show, sir.
Hey, Mark, good to be back. Another day, another 20-point rally in the S&P.
What fun would it be if it wasn't that, if it was just a half a point again? You know, back to the old unched 0.0 move days. We don't need to go back to those days. This is good fodder for radio, Alex.
Yeah, another Bernanke dividend day.
All right, and also joining me from the land also known as Maine, some people call it lobster country, he is the rock lobster himself, good old Andrew Giovinazzi from OptionPit.com. Andrew, welcome back to the show, sir.
Good, what is it, evening? Afternoon? I don't even know. It's after the close, and hello, everybody. Thank you for inviting me to your virtual party on the air.
Typically, when you start that good, you know how it's going to end before you start it. But hey, sometimes it's good to have a surprise at the end there. You never know. Good day to you all. That's what you say. There you go. Good day. That covers just about everything, except the wee hours of the morning. All right. And unfortunately, Uncle Mike won't be able to join us today. It was a very low BBI day, and all of you who've been following the show for a while know that means he's been consumed by other issues over there at RCM. He'll be back to join us on Monday, where we also will be joined by a very special guest. He is Henry Schwartz, the founder and CEO of Trade Alert. Those of you who made it to our event out here in Chicago last month know what Henry offers and all the great data and analytics he brings to the table from the options space. It's going to be very exciting. I was surprised to hear he's never actually been on this show in the past. I thought he was a guest in the past, so it was my error in not bringing him on sooner, but we're going to have him on Monday. Should be a great guest, and looking forward to a lot of great insight and data from him. But now it's time to kick things off with today's edition of The Trading Block.
The Trading Block.
All right, and welcome to the Trading Block. This is, of course, the portion of the show where we run down the day's worth of action. And it was indeed quite an eventful day today, as Alex alluded to there at the top of the show. Another one of these days where we actually had some movement, mostly unidirectional, throughout the day. It was the S&P closing up about 1.5% on the old day to 1675, flirting with new all-time highs. We have the Dow up about a little over 1%, and the NASDAQ leading the charge today up 1.6% to 3578 on the day. So a lot of green on the old screen today. The bulk of that being driven by our good old friend Uncle Ben. Yet again, he made some comments last night talking about how they're probably going to have to take a very highly accommodative policy going forward to keep the economy moving. That, of course, translates into rally-ho in the old market. So we saw a lot of rally, saw some vol coming off, all the typical things we see when good old Uncle Ben spreads some love. So speaking of spreading love, Mr. Andrew, what part of that love really caught your eye in today's market? Maybe we'll start today with the vol, not the aggressive crushing some may have looked for, looking at the VIX cash at least. The VIX cash closing down about. Yeah, you know? It's kind of hard at this point.
You can't. I mean, there's actually name volatility was up in a lot of stocks. You can't crush volatility, and at least in, let's say we'll just take the VIX to begin with, and the underlying moves at around like an 18 VIX in movement. That's 1.3% is a huge move. And how are you going to go below 14 VIX when you have 18% movement? So it's not that the market didn't, I don't think, like the move. I think it's still, if we're going to keep making this sort of movement, it's hard to have index volatility get too low because it's just we're moving, right? And what I was surprised is I thought the market took the earlier Fed policy statements yesterday pretty well. Like, okay, half the governors think we're going to close QE down. We are going to looking at maybe closing down the policy and 2015, blah, blah, blah. I think it's the same stuff they said, and then Bernanke comes on and somehow makes it sound like they're going to be more accommodative than his last statements, which I don't think was a great thing for him to do. Like, he wants to talk up the stock market and leave it at a record before he leaves? I'm not quite sure what the reason for being. The only thing I can think of course, is mortgage rates hit a 2-year high. So that might have freaked him out a little bit. And I don't see how anything really has changed much, right? You still got more Fed governors than the last time wanting to pull back QE. So, but whatever, the market liked it and they bought it, they bought everything. But from a volatility perspective, don't expect volatility to come down in the short term. I mean, the VIX was down 20 cents. Normally, if the VIX started at a higher level with this kind of a rally, you would have seen a total massacre in at-the-money volatility, and you just didn't see it. And you also didn't see, I have the actual volatility of individual strikes here as I pull it up, pretty much unchanged for the day. Looking at September, August, and let's say the later August weeklies and SEP options, vol didn't even come down. So, I mean, the VIX as it's calculated dropped a little bit, but implied volatility is essentially not coming down. What else can you say? So it ain't going to come down when we move this much.
Do you think this is just, we're talking fairly priced territory here, or do you think we're getting into upside crash territory where it's going to start juicing some vol back into these markets?
If we have a continued rally like this tomorrow, yeah, upside. It is kind of upside crashy. The vol will go back up. Because we haven't even had any earnings yet. I mean, realistically, has there been a change in Fed policy? Maybe Alex can speak to it better than I can. But I just don't see I don't see vol coming in when we're moving like this. It's just too hard. I mean, you can crash up and vol can go up. And we haven't even had any earnings come out yet. What if earnings suck? You know, we could probably be right back where we were as far as, maybe 165 on the SPY, or 1650 on the SPX. So, I mean, we hit a record on no real new news, which it happens. Market does what it does, but that's why the vol's not coming down.
I'm kind of with you. I was surprised that Uncle Ben threw as much gas on the fire as he did, because he knows, he's not an idiot. He knows what those comments are going to do and what the reverberations of those kind of comments are. So clearly he wanted to pump some old blood back into the system. Perhaps he thought the current rallies were simply not sufficient to his taste.
Yeah, exactly. And then the treasuries didn't move a whole lot.
You're right.
They nudged up a little bit price-wise, yield down a little bit, but he didn't fool any of those people.
No, it's these people who are bidding up forward to like almost 17 and all these crazy things just bouncing off this rally. And Alex, I almost called you Andrew. I apologize for that, sir. Alex, what do you take with your Mr. Macro on the show these days? What do you take with Uncle Ben's comments and this broad rally we've been seeing for multiple sessions now?
Well, to Andrew's point, the treasuries didn't move much, but they did move. I mean, the 10 years back down to the 257 coming off 270. Treasury's been a realized vol of over 30% almost every day for the last couple weeks. So there are people hanging on to Bernanke. I think the irony about having Henry on Monday is Henry ran the dispersion book at Solomon Brothers a long time ago. And just quickly, what dispersion books did is they traded stock vol versus index vol. It requires a longer explanation than that. But yeah, to Andrew's point, if earnings are good and stocks continue to rally and stock vol comes in, then the firms that still run dispersion books, and there aren't that many of them anymore, will crush the VIX. I mean, they will be buying equity vol and selling the VIX, and they'll crush it. But, next week's earnings are everything. The show we did on Monday, I said, forget about earnings. Let's just look at macro. But, earnings tomorrow, J.P. Morgan and Wells Fargo, we had a lot of people playing at J.P. Morgan today. And then next week, it's like it's alphabet soup. It's AMD, it's Citi, it's Bank of America, it's Microsoft, IBM. It kind of starts to be everybody. And if it's a good earnings week and we continue to rally and stock vol comes in, it's going to be a big afterburner here, especially if the 10-year can't hold 250, goes back down into the 240 area. This market's going to melt up. And the folks on the street that have been talking about Dow, 17 and 18,000, they could see it sooner rather than later. Having said that, earnings are crappy. It's going to go the other way. But, we'll have a taste of it tomorrow with J.P. Morgan and Wells Fargo. And I don't think vol will come in for the weekend. But, boy, next week is just going to be a fun week. Plus, next week is expiration week. So I think everybody's going to be laser focused on earnings next week, on the 10-year. And it's going to be a fun ride next week.
Are you guys implying that a 20-cent rally in Alcoa post-earnings is not enough to cause this broad rally and really drive this market north? I mean, come on, it's Alcoa. What more do you need?
Yeah, I mean, look at AMD today, right? Earnings next week, the stock moved 10% today. I mean, it's a $4 stock, so moving it 10% isn't that big a deal. I think one of the issues here is we're looking at markets that are still thinly traded. And there was a proposal today to roll back Glass-Steagall. Elizabeth Warren and her crew hit the market with that. There's still a lot going on in the dealer community that I think we're seeing in the market. And I think these markets are thin and the moves are going to continue to be big.
You're right, though. Next week will be a very interesting one. I don't want to stomp all over the listener question we have for later, which kind of gets into some of this. But, it is an interesting time if you are typically prone to be shorting some gamma going into weekends into next week. Maybe you want to keep your powder dry or perhaps even reverse that because there are so many earnings on the table for next week. It might be a good time to have some gamma in your back pocket. The vol has come off in a lot of these names across the board to the point where, like we talked about earlier with Andrew, that how much more can it come off? And you're probably not going to see a huge decline going into the weekend because we have earnings tomorrow. So it might not be a bad time maybe tomorrow afternoon to start looking at some sweet spots to start loading up on some gamma for next week because we're poised with so many names. Again, I don't want to get all over the around the block either, but so many names coming out next week that might be a good time to have some bullets in your back pocket. What say you, Andrew? I know you've been so focused on Zynga, it's kind of hard to look away, but
actually we've had a lot of bullets. So we've been bulleting. We've been long more gamma than we're short for a while. So this move surprised me. I'm not going to cry about it. It worked out okay, but it was definitely a bit of it was a surprise. I thought that, what am I going to say? We have some bullets. We continue to have some bullets. We sold some, and wound some calls today, but it was very surprising. I thought things were going to kind of peter around here a little bit, and I was going to make in, the no dollars, but I'm making a couple bucks, so that was okay.
Is this going to be Chapter 17 in the Buying Juice and Doing Stuff anthology?
Exactly. Well, when they want it, you got to give it to them. And if you have it, you got to sell it. I mean, one of the things I'm talking to a client, just our students there, if you own gamma and the market rally's big and you make money, got to sell it. Gamma is meant to be sold. Because if you don't, you ain't going to make any money.
Sounds like Don Schlesinger has slipped into this podcast somehow.
He sells the gamma before he owns it.
That's true. He never does. He doesn't waste time with that buying step. He goes straight to the
Andrew,
selling.
If we take out 16,000 on the Dow, what do you think happens to VIX?
It's just how fast.
Next week?
Next week, I don't know, maybe 12.5 at that level. It's just how fast it gets there. If it gets there in one more leap, I'm not quite sure because we had a crush and realize vol, a pretty hard one the last, I would say, 2 weeks. And I thought I thought the market had accepted the fact that the Fed was going to start to pull out, or, the timetable had essentially moved up a little bit from past comments. This is a sea change, or he's just reiterating the fact that maybe nobody understood my last comments, which means I'm not doing anything super big. I'm doing everything slow, right? So, but where does VIX go if we get there? It's just how fast. I think a 16,000 Dow will put us at a lower VIX level, but I'm not going to say, too far below 13, maybe 12.5. That's tops, which should be the low of the year.
So let's play that out. So next week we get IBM, we get Intel, we get the banks between Friday and the balance of next week. I mean, we get JP Morgan and Wells Fargo tomorrow. We get Microsoft. What are large cap equity vols going to be if the earnings are decent to good?
Oh, they'll get crushed. They will be in the low 10% tile of the year.
So that's got to take VIX down. It
is, but how it can't. It's hard for it to go much lower than it is, right? It's hard for the VIX to go below 12, let's say. I mean, we need sustained lower realized volatility. We haven't seen it, and we're also assuming that when we're at a high, that we're going to stop moving around a lot because every time Bernanke sneezes, now maybe is he going to change his mind? Is he going to reiterate his reiteration? So we still have the potential for a market at a higher level to still be moving 1% on whatever. So again, this move was a surprise to the market in general. But name volatility can go down quite a bit, but the index itself can still trade, it's just nobody wants to buy options in those big cap stocks.
This gets back into the weird beast that, VIX is all masters to all things. It is the implied vol of the S&P front month. It is its own tradable product with its own tradable life and essentially its own skew. It has this whole universe of ETPs and ETFs pulling it in myriad different directions. So that really tends to gumming up the works. And we said this many times on the show in the past. It no longer is that pure front month implied vol play of the SPX with a little bit of skew thrown in for some fun. It really is its own beast now with its own life, and it could really do so many different things that makes these kind of discussions very difficult from that sense. But of course, going back to what we hit on our show earlier this week, we had our guest talking about the metals. We touched on then that it might be a decent time to start looking at those because might be rally ho time in those. Of course, a lot of our listeners focus on GLD and SLV, so we'll focus on those as well. And it has been indeed a rally ho time in the metals across the board, with gold up, well, actually silver up about 5.5% today, and gold lagging, but not too much, up about nearly 3% on the day, and SLV itself up pretty much a full point since we talked about it earlier in the week. So if you're looking for your vol, if you're looking for your vol and your movement, you don't have to go that far afield. These the metals are really kicking it into high gear. Have you guys seen a lot more interest, Andrew, from your clients and mentees in the GLDs and SLVs of the world and starting to migrate away from equities?
Actually, it was funny. We had like a Iron Condor. We closed yesterday in SLV. We actually even closed our back spread mostly because after Bernanke, just going into his comments, I didn't see a whole lot of upside in it if he just does the reiteration on the reiteration. But of course, that was shocking. So that was the one place where probably holding on to the gamma a little longer would have been nice. But from that point of view, that's kind of how we've been looking at it. Sort of, they have not been as interested in the commodities, mostly because they've been sort of in a no-man trading land. It's been hard to trade them. They've been just whipping around a lot. And they're whipping around a lot at a high volatility, but then they kind of stop and everybody gets depressed about them. So it hasn't been an easy trade from any kind of trading perspective lately.
Yeah, I bet you a lot of your clients come into it with a traditional equity perspective. They want to maybe do some covered calls. They want to leg into, collars, or even in your case, iron condors, and it starts to get a little bit more difficult given the way they've been trading lately to try to apply those old strategies in those types of products, because especially silver has just been quite the beast of late, and just trying to keep a handle on that one alone is if you're really not that versed in the metals, it could be challenging. We talked on the show in the past and joked about all the logistics that go into actual metals trading and the warehousing and things like that, and how that plays into the ETFs and their own requirements and logistical requirements. And these are things that are totally outside the scope of most equity and index options traders, and so they really have to almost re-educate themselves on a lot of these things to really be fluent in what's going on in the underlying, let alone how to leverage the options against that. But speaking of leveraging, we have some more options to discuss here. Coming up in the old odd blocks, I think it's time for all of us to put on our fedoras. Alex, you can substitute your Viceroy hat if you like. And time for us to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, the portion of the show where we break down some of the interesting, unusual, and perhaps highly dubious activity that we've seen on the old street today. We're going to kick things off with a typical Odd Block special, some upside call buying in a name nobody's ever heard of. We're going to kick it off with Colfax Corp, ticker symbol CFX, and this is the name that usually does a whopping 840 contracts a day, doing about 2,600 today, so about 3x its ADV. They closed today at $51, roughly even, pretty much unched on the day. And there's been a pretty broad uptrend here in good old CFX. They were trading 42 back in earnings in April, now closing at 51. So been a nice little rally here in Colfax as well. What we saw was someone coming in and just loading up on a boatload of some upside calls, the D60s to be precise, loading up on 2,500 of them for $1.25. That, of course, is closing because we have about 2,700 contracts open on this strike, and if you look around this name, that's pretty much the biggest open interest we see. So clearly someone coming in and closing this trade. Andrew, what's your take on our friend here gobbling up some upside in Colfax?
I'm going to assume, it's tough, that he just had a buy right and he's closing, but I don't understand why. It's kind of like a buy right type option, right? A bunch out of the money. Maybe he bought the stock, sold the calls, he got us some compression and he's unwinding it. I'm not quite sure why you would do it because, the calls were down very quickly after that.
Yeah, he pumped up that IV for a little while, then it kind of went right in his face, pretty much.
Yeah, and the funny thing is, this is about as high as the stock has been. So, I've just assumed that he must have bought some stock lower, sold these calls, and maybe he wants to open up the upside a little bit. Because
he's seriously bullish now. Now he's in it for keeps. He's serious.
He's in it for
forget about getting called away at 60. That's way too low for him now.
Yeah, because the IV's picked up a little bit, so I don't get it. And the only possible thing, like I said, for unusual activity, maybe it could be opening paper. It just doesn't make any. Possibly, it just doesn't make any sense, though. So
yeah, the only thing probably more puzzling than people just buying nonsense out of the money calls is when they close out ones that look like they might be working pretty well for them. Keep this on, let that come in, take that $1.25 off the table on however many shares you have. If you get called away at 60, hey, ballyhoo for you. And instead, he takes it off the table. So who knows?
It's called the odd block for a reason. Because I have to actually find things that are sometimes confounding, and I was a head scratcher a little bit. Either way, though, the guy's bullish. Let's just call him bullish because
I think we can safely agree upon that he sees more upside than the 60 handle for that name in the near future.
If he gets taken over at 70, we're both going to be like, okay, we're idiots. The guy was right. How did he know?
Yeah, even though it's a closing trade, so you don't really need to watch it, but I kind of want to put it in the to watch category just to come back to it in like a couple months and say, oh, this guy actually was a genius. He's trading really 92 right now. We're all idiots, but so maybe I'll make a little note here to come back to this one in a couple of months. But yeah, it just violates so many core principles for me that
it is a little violating. Okay, I got you on that one.
Yes, we've all been very violated. We'll tell the therapist later on the doll where they touched us, and we'll all feel much better. But instead, taking that image out of our mind, we'll keep on rolling into. I can see Alex just cringing in the headset right now.
Yes, he's always like, oh my gosh.
He's like, what are these guys talking about? So let's move on.
You guys need girlfriends.
Don't tell my wife that. She may agree with you. But
has nothing to do with marriage. You need a girlfriend.
All right. Next up, quickly moving along. Next up, we have one of I guess you can call this an Andrew special. I know you love these energy pipelines. This is Atlas Pipeline Partners LP, ticker symbol APL. This one, from an odd block perspective, actually somewhat active. They do about 1,300 contracts a day compared to the 200 contract names you talk about all the time. That's pretty sizable. And they did about 3,500 contracts today. Again, someone coming in with pretty much one motive in mind. This time it was to blast out some long-term puts, in particular the Jan 2014 30 puts. Doing them on splits for 65 and 70 cents. Of course, that means they're doing the half there, 67.5, 3,000 times. I'm assuming they did them on even ratios. Maybe they didn't.
But it was in pieces.
Oh, okay. So, yeah, who knows what price they ended up netting. But somewhere in that mid-range, listeners, you can do the math at home. The open interest on this strike is pretty sizable, though, about 15,000 plus contracts. So that starts to get us into this nebulous reason of what the heck this guy was actually up to. Andrew, this one obviously lighten up your own personal tape here. What was your take on our friends selling some puts out in the pipeline land?
Right. Well, one thing is I believe when I was looking, it's the biggest open interest in this name. In full disclosure on a couple of pipeline stocks like this, and It's just this. I think this is a guy just selling lots of these puts. I like to see tomorrow if there's a change in open interest. If the open interest goes up to around 18,000. But I think they're like, okay, I don't know if I want to own the stock at 39, but the dividend's 59 cents, and I'll just sell these puts and collect the dividend this way and not have to have the risk from 39 to 30 on the divvy, which is kind of what it feels like. So that's kind of what this trade looks like for me. It's only 6 months away now. So you get a fraction of the risk, a 25% less risk because this is a 30 strike and the stock's trading 40. So I think they're looking at, well, maybe this puts a decent sale here like this.
Yeah, typically this is the name. This is the type of trade where you can go and start peering into the vol and see what this guy did. But we know they sold them, so it's not really much of a mystery. But the vol relatively unched on that strike.
Yep.
And you're right. Looking around here, there really is no other open interest to even compare with this. We got like an 1,800 lot on the Jan 35 puts, and looks like maybe a condor went up on the Jan 35, 37, 40, or a fly on those strikes 1,500 times or so. But aside from that, there's really no appreciable open interest to speak of. You got 16 lots and 20 lots everywhere else. So someone, for whatever reason, is just married to this strike and is really
or somebody that wants to
out.
buy the company and they're just,
there we go. Drawing the line in the sand. This far, no farther.
They have $30, we'll take the company and we will sell these things till our head caves in. And that's, I remember seeing paper like that a lot. My favorite one is some guy selling puts in Coke in 1991, put so many puts he actually drove the volatility down in the SPX. I don't know who exactly what it is, but they must have had billions and billions of dollars because it felt like they sold billions and billions of Coke puts. And of course, we know who the biggest Coke individual investor is.
Yes.
And he had no worries selling, I believe, literally 50,000, 100,000 puts in Coca-Cola, and he made a gajillion dollars on that trade.
There are certainly worse. Of course, you're betting again. Well, you're betting with Mr. Buffett, so there are worse things to go your way there.
Yeah, I think it was him.
Yeah, I think so.
Nobody had the money in 1991.
It was the Hunt brothers taking their silver money and diving into
exactly. I don't know who it was. I'm just assuming it was somebody that knew that he was buying a lot of that stock.
We're going to close out here in the odd block with a couple little ones. First off, WisdomTree. We've talked about this one in the past. I'm trying to dig up what it is we talked about, but I don't have it here at the top of my head. But this is WisdomTree Investments, ticker symbol WETF, not WTF, like you might want to think with WETF.
WETF.
That'd be great if the ticker symbol is WTF, though. That'd be hilarious. Closing today. One more time. Closing today at a whopping $12.48, up 2% or about 26 cents. On the day. This is another little one. They do about 400 contracts a day, doing about 1,200 today, so 3x. Still pretty small. But what's interesting is the bulk of that, pretty much all of that, came in one sizable trade. We saw the SEP 12 halves going up 837 times for prices being bought, obviously, for prices in the 90 to 95 cent range. Of course, there is some open interest here, so we could have a closer. Looks like we have a fly on some of these strikes as well, with the 1,800 lots open on the SEP 10s, 1,300 on the SEP 12 halves, and about 1,800 again on the SEP 15. So it looks like some sort of spread went up there as well. What's your take here, Mr. Andrew? Closing here, or what are you thinking?
We usually look at the WisdomTree ETFs, and this is the actual stock itself of the investment company.
That's right. That's why that name was sticking in my craw there for a
And they do a lot of emerging market stuff. And my thought is, okay, the emerging markets are kind of in the tank, although today they exploded because we're going to keep buying bonds and keeping rates at zero forever. Therefore, all those crazy banana republics look like great investments again. The market very fickle. I think this feels like it was really weird because the customer on buying them was aggressive in the morning, like lifting the offer, couldn't quite buy what they wanted, and eventually started to get filled, but they ended up the day being bid above where they initially buy them. So I just think whatever this was somebody that wanted to buy the call. So I'm thinking the paper was opening, and that's that was just my sense on this, just by the way they were kind of lifting the offer. There wasn't a lot of liquidity in it, so it was sort of hard to buy it. The only, obviously, if you look at open interest, could be a call override or something like that, or maybe the guy that had the fly, unwinding as well. But
yeah, could be
it looked
chasing the
pretty
close,
darn aggressive for just trying to close, opening paper.
Yeah, that's true. You don't see people chasing lifting bids that often, lifting offers, I should say, if they're just closing, unless they're risk managers on them. Hey, get this done. Other than that, you usually have a little bit of wiggle room. You can do some nuance. You can come in mid-market and try to feel it out. When you're chasing like that, you're right, it does tend to have the hallmark of opening paper in that sense.
Yeah, that's why it was a little surprising, because there was some aggression with the purchase on the outset. So, we'll see. This is maybe another one that's just a stock that could make that move up until the 14 handle. I think that was the high of the year on it. So it's kind of trading sort of, blip-bloppy range. It hasn't done much, but a call that could very easily make you some money. Vol's pretty cheap, so we'll see.
I love that blip-bloppy range. That's where the money is made, sir, in the
blip-bloppiness.
That could be another subtitle for your book.
If I can, it's a real interesting company. It's Saul Steinberg's kid, Jonathan Steinberg, who happens to be married to Maria Bartiromo from CNBC, and they've never really made a lot of money until lately, to Andrew's point, when the emerging markets took off. And it's a real interesting little firm, because they're a niche player in the ETF field, but their board is just the royalty of the hedge fund community. So I would look at that volume, and I would suspect someone thinks the stock's in play.
Interesting.
Ooh.
Interesting. A little nugget from the Viceroy. That's why we like having you chime in on these every now and then, Alex.
I'm going to go out on a limb and not disagree with the Viceroy. I'm going to say, Viceroy, I like that. You know what that is? That is value-added introspection right there, listeners.
This is someone having a nice dinner chat, perhaps with Maria Bartiromo, and they whisper something over the table, and he runs off and scoops up some of hubby's, some calls on hubby's.
Exactly. Now we're going to find out Maria Bartiromo's like 800 WETF calls.
Exactly.
And everybody, your viewership will go up about 500,000% if WisdomTree gets taken over in the last week.
I will
sing that from the rooftops.
I didn't tell you I'm changing my Twitter handle to Money Honey. Or is that taken?
Yeah,
I'm sorry.
She's had a lot of interesting names. When we lost our CFO at the ISE, he was plucked away by WisdomTree. But as I said, Jonathan, who started the company, is Saul Steinberg's son. And the royalty is obviously Steinberg, but Michael Steinhardt is their chairman. So they've got real ties into that New York hedge fund community. So, I would look at this volume and kind of scratch my head and say, this is more than an unusual volume. That's a name that I think for a long time has been, I need to frame this right, hoping to find a larger partner to absorb them.
Stock's up 100 this year alone. It's up around almost a double.
There you go.
Yeah.
So good.
I would bet this is probably the first year they've made real money, and they've been around more than a decade. But the play in emerging they're leveraged into that play.
Well, you're right. They went from penny a quarter to 3, 4, 5, 6 cents a quarter. So there you go. There is some growth out there in emerging markets.
So now we'll all be buying it in our dog's name.
Just because the Viceroy likes us so much, we'll add that to our one-to-watch list as well. And I think we'll do a quick wrap-up here of these last trade here. This WHX, this is, of course, Whiting USA Trust. They closed today at $4.59, just to make Alex even more angry. A sub $5 name to throw into the mix. And we've got someone coming in and gobbling up some upside here. Relative upside, I guess you can say, the DS5s. So a little bit out of the money here. Buying about about 1,100 of these for about 45 to 50 cents. Alex, I know that sticks in your craw, 50 cents for a $5 call option. But c'est la vie, that's what we saw out here. This course, there's some open interest. Again, that's kind of the narrative today. People perhaps closing some OI or perhaps adding to existing positions. About 1,000 open here on these DS5s, which is substantial for this name. So what's your take here as we wrap up the old odd block here on these DS5 calls in WHX, Andrew?
Yeah, really, strange volume. I think it's around the dividend. It pays a 45-cent dividend. It looks like they have some earnings. The earnings are a little spotty lately. The stock is down quite a bit from its highs. This is pretty much the low. And maybe they pay a dividend and somebody's trying to piggyback the fact that, we bounce off. But what's strange here is you've got a real disparity in volatility, for the name. So the SEP calls the vol was up in September about 14 points. And it looks like there was either some news out or something along the lines here of this divvy being paid in here. So kind of funky. I think there's funkiness going around the dividend. I think somebody's taking a flyer on this, whether they're, they traded more than the open interest and it was scattered, which leads me to believe that this is some kind of option buying. And then it looked like there was buying on some of the other strikes as well. So I think that, it feels like the paper's saying they're probably going to pay the divvy. And then all of a sudden, if they're paying a 45-cent dividend in the middle of August, then the divvy's 10% of the value of the stock. So this feels like kind of a cheapy company, a driller. So it feels like they're going to pay, and then the stock might make a little run here. So that's kind of how I saw that volume.
Dividends driving so much of what goes on in the option space. I think maybe we need to revisit some of those div plays too, now that in light of the OCC's recent changes to their dividend play structure, see how that's really annihilated that volume going forward. Maybe that'll be a good future topic for the show. But now it's time to keep on rolling right on into the Viceroy segment, a.k.a. the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome to the Xpress Block. This is the portion of the show where Mr. Alex takes the reins, and I take a bit of a rest to sip a beverage and soothe my tired vocal cords. Alex, I'd imagine a lot of phones ringing off the hook over there at OX today as the markets were sallying forth yet again. I bet you a lot of your customers over there really falling into the tech category. I know they have in the past over at OX. I'm guessing Amazon and probably Google were probably lighting up a lot of the tape over there at OX today. Am I correct, sir?
Yeah, spot on. And Priceline. It's the race to 1,000 between Priceline and Google. But the phones never really stopped ringing today. And it was the metals, but Priceline was the thing that seemed to keep the desk really hopping today. But the activity, we've talked about this before. I write my notes, and for the last few weeks, I tear them up at 5 minutes before the close when I put the headset on. But the phones were just constantly ringing today. And when I surveyed the desk guys, the name that they came up was Priceline. Amazon, when it popped over 300, certainly got some traction with our customer base. This market is clearly a market where, with all these high-priced stocks, Amazon over 300, Priceline and Google, even Apple got a little bit of a trade lift today. It's just so right for an options market. You just don't want to own those equities with the inherent risk and possible reward when you can, buy something for a couple bucks out of the money and if you're right, see a significant payoff. So it was a busy day today. I look at my screen. I have no red indicators on my screen, with the exception of volatility, which was down a little bit, and crude, which really got beat up today. But it was green lights everywhere. So a busy day, an interesting day, and really looking forward to next week when earnings begin.
Pretty much the only red light on my screen here today is Chicago's own Groupon, so perhaps that's a singular distinction for us here in Chicago to have the only one of the few red lights. But you mentioned, of course, the race, Google, the Priceline. I think when I'm looking at those types of things and I'm gauging which will hit 1,000, you have to bet on Shatner, right? That's just where the smart money has to go in that type of race. Always bet on the Shatman.
Eric Schmidt versus Shatner. Now
I'll take Shatner any day of the week, sir. Captain Kirk, T.J. Hooker. How do you bet against the man?
Absolutely.
Now, you mentioned
You're
the metals.
spot on.
You mentioned the metals, too. I know OX has been making a big push into the futures options. Where are you seeing the OX customers? Where are they falling out? Are they falling into the big futures options, or are they still primarily in the SLVs and ETFs of the world?
So our customers both, but the growth in futures options, especially people trading what I'll call relatively inexpensive premium out of the money, gold options, the old COMEX, the CME option is remarkably liquid, and you can get stuff done. Plus you can trade it after hours. So I'd say it's still kind of a balanced mix. But if you'd asked me a year ago, it would have all been in the GLD or the SLV for the folks who wanted to play silver. Now it's actually a mix with a lot of activity in the futures options. I think in a lot of ways the futures option for the well-informed customer is a better play, because you don't have all that end-of-day rebalancing of the GLD. So, even though the GLD is a good surrogate, in a lot of ways the futures option is better. If I flip to energy, the futures option is vastly better, because it's so much of a better play than ETFs.
USO is just atrocious.
Yeah, they do a poor job. In fact, what they were kind of, if you want to trade it in the worst way, and it's so much better to trade via the CL option. It's so much superior, and you got great liquidity, you got electronic execution. But what we see here is still a mix.
Well, it's certainly interesting, especially compared to what we, like you said, exactly like a year or two ago would have been all SLV and GLD. So seeing those customers graduate into the big boy, quote unquote, contracts is an interesting one. And certainly one I know you guys have been working at OX on for quite a while and try to get those customers educated and making it easier for them to do it with the single account access and things like that. And that's really taken away a lot of the hurdles, which leads to people discovering these products en masse. So interesting stuff. Thank you for that, Alex. Now we're going to keep on rolling right on into one of my favorite parts of the show. This is your segment, the listener mail segment.
Now it's time to empty the mailbag and see what our listeners have to say. It's the Mail Block.
All right, welcome to the listener mail segment. And Andrew, looks like we have one that's tailor-made for you. This could be chapter 3 of the Buying, Juice, and Doing Stuff book. It's the question from Neal Rivers, a longtime listener, and he says, you guys have discussed the quote-unquote gamma effect before on this program. I'm not sure, Andrew, if he called it that, but I do know what he's referring to. Neal continues, excuse me. Neal continues, my question is, how far before an earnings announcement does this typically kick in? Can I buy some gamma 2 or 3 weeks before the announcement and expect to pay no decay, or is it more like 2 or 3 days? And listeners, if you're not familiar with what Neal's referring to here, we've discussed on the show many times in the past some of the interesting effects of things like earnings announcements and other things that tend to boost vol going into them. Of course, they have the nice benefit of tending to offset some, if not all, of the time decay, the theta you're experiencing in a lot of those options. So if you're traditionally a premium seller going into those final few weeks, it probably pays and makes sense to turn that on its head and perhaps buy some of that gamma instead, because you're getting essentially a few free days with little to no decay in those. And Neal's question is an interesting one. It's one we debated perhaps off the show and sometimes on the show in the past as well, as when that really kicks in. And the answer really, Neal, and then I'll toss it to you, Andrew, is just, it depends really very much on the name. We've seen some names that start to get that implied vol boost really early, maybe even as much as a month out before the earnings announcement. Now, don't confuse that with the implied vol, the term structure of that earnings month being a little bit higher. That's always going to be higher. You're going to see that. But you're still going to see those earnings months decay for a little bit if you get in too far out. If you get in 6 months ahead, guess what? You're going to pay some decay. But if you get in, starting in a month at some names, you can see that decay really start to be dramatically offset. Whereas in a lot of traditional names, Andrew, who knows, maybe you'll disagree with this, or maybe a little bit good back and forth here. But, in some other names, we see that, start kicking in. I'd say traditionally within, 2 weeks. Certainly in the weekly of earnings, you get a lot of that effect, definitely. Andrew, what's your typical time frame when you're looking at these types of trades, these kind of free gamma scalp type trades? How far ahead do you get in? Probably 2 to 3 weeks or farther, closer? What's your time
well,
frame?
we usually, I'd say the time is right around 1 to 2 weeks. We have a trade I had on a Microsoft today. Actually, we bought it 2 days ago because they kind of had this double kicker with what's his name, Ballmer, going to restructure the company, blah, blah, blah. And again, we bought the free gamma there, did not decay yesterday at all. And today, obviously, the stock was up $1, so it was a nice little win. Apple, we're looking 2 weeks out. The Apple volatility got insanely cheap today in the earnings, the weekly earnings. That's about the 23rd or something like that. So it's about 2 weeks away. So somewhere between, I'd say, 1 to 2 weeks, I've done it. I've gone out as far as 3 weeks before in names with extremely low volatility, like a Cisco or a Softie, something like that. When they've kind of already set that earnings straddle value very early, and you just buy them and you see what happens, and you have like the decay is literally like, I don't know, it can be anywhere from 10 to 20% of what the actual decay is on your on the theta line for your risk thingy. So I think it's more to do with how high the vol is going into the particular earnings cycle for the for the stock in question. That's how I read that. So usually 1 to 2 weeks. Every once in a while you might see 3 weeks, but more likely just the 1 to 2 week window.
Alex, anything you want to add here for our friend Mr. Rivers?
No, Andrew's spot on. The only thing I would add is be careful of kind of generalizations. Some things it's a week or two before. Some things it's a couple weeks before. With Apple for a while, although that's not the case now, it was many weeks before. And one of the issues is also what's the earnings, consensus. If you're talking about a Procter & Gamble where, the consensus is within a penny, you don't see a lot of extra vol coming in. So, talking about this, we really have to talk about it in generalities, and depends how liquid the instrument is. If it's stuff that's thinly traded, you might be able to carry it into the morning of expiration. But the problem is that if it's thin, you're going to have a hard time getting out. So I think Andrew's views are spot on.
Great question, Mr. Rivers. Like we said, it really comes down to knowing your underlying. Check out the term structure. Check out how it's performed in recent earnings cycles. That will at least give you some insight into what's been going on. And look how it's performed in various levels of volatility as well. You don't want to go into a typical earnings cycle blind, not knowing how your name has performed in other scenarios. So go back, do a little bit of homework. I know a lot of people don't like to hear that. Oh, I have to do some work. But, making money is not free. No free lunch out here. Do a little research, see how your name has performed, how the term structure has performed, and that will give you a better sense of how far out you can go. But I think, general rule of thumb, Andrew, spot on this one, 1 to 2 weeks, usually a good frame of reference. All right, thank you for that. And now we're going to close out the old listener mail and dive right on into our final segment, Around the Block.
Around the Block.
All right, and welcome to Around the Block. And this is the time of year we love because it's a chock full Around the Block segment. Pretty much all earnings. As you mentioned earlier, JPM and Wells Fargo coming out tomorrow. As you listen to this show, listeners, you'll have seen what's going on with JPM and WFC. We've got Goldman Sachs, a lot of banks coming out. Goldman Sachs on the 16th. And, of course, next week it really kicks off with a lot of the big tech names coming out. We have IBM, Intel, and Bank of America on the 17th. Microsoft, Nokia, Google, Chipotle, the stealth Apple, which is trading much closer in value to Apple right these days than it has in a long time. All of those reporting on the 18th. So if you're looking for some vol, if you're looking for some gamma, if you're looking for some bang for your buck, next week is where it's at. A lot of big names really going to mix things up next week. It's nice to be back in earnings crowd again, earnings season again, and of course, you still have Uncle Ben and the macro events holding sway over the market, but it's nice to see a few earnings names starting to trickle in again and having at least a little bit of fundamental underlying impact on the old market. Alex, we'll start with you. What are you watching for next week?
You pretty much were spot on. It's earnings. And I think there's going to be a laser focus on what the reports are like. We're watching the 10-year. But if earnings are good and, vol kind of stays in here and we start out tomorrow with good JPM and good Wells Fargo, tomorrow could be a big day in and of itself, easily in expectation of stuff, whisper numbers will start to leak out. But I think next week is going to be real interesting. And I think if we have a good Friday tomorrow with Wells Fargo and JPM, we take out 16,000 next week. I know that's a big jump, but IBM has already kind of moderated their expectations. The industry's not expecting a ton from Intel. You get surprises in those two, we're off to the races.
Andrew, aside from legging into risk reversals and Zynga, what's catching your eye for the rest of this week into next week?
Same thing, Alex. Earnings, trying to unwind some of the stuff we got on. But it's earnings, and we're going to see if they're good or not. If we can clearly the market anytime. I understand how the market loves the fact that Bernanke is going to continue to support it. However, I've never quite understood why the market continues to like it, especially when it feels like the equities had really essentially adjusted to the fact that the Fed was pulling out. I mean, Treasuries maybe got a little high for Bernanke at 2.7%, which is about, almost 100 basis points above where they were about, a month ago or something like that. So that obviously freaked him out. He figured he had to talk it down a little bit, but that has traditionally been, at least it has been short-term bullish for these kind of pops, and then the market sort of takes a while after that to digest really, what the fundamentals are to keep us going. So if we have, I would say great earnings, the expectations are pretty low. So if we start really putting up some decent numbers, we could still go higher because this whole year the wind has been at the market's back the whole year. So there's nothing I can see except for, catastrophic news somewhere to change that fact.
All right, listeners, as we discussed earlier, the moral of the story, if there is a week coming up that you want to have some gamma and some bullets in your back pocket, next week may be that week, so keep that in mind. I know Mr. Rivers, who wrote in, probably will be. Very well-timed letter, Mr. Rivers, and that is going to do it for this episode of The Option Block. But before we go, I want to check in with each of my cohorts, my partners in crime, to see what they have kicking in their respective necks of the woods. The boys from RCM couldn't be here, so be sure to check out RCM Asset Management for all of their upcoming webinars, and Uncle Mike's webinar train will be rolling into town near you next Thursday yet again. And if you haven't listened to it, actually it'll be too late by the time you listen to it this week, but you can tune in for the archive of tonight's episode as well. And Mr. Andrew, what's cooking in the land of ye old pit?
We have a kind of like a 2-day freebie coming up. You should see some announcements for that relatively soon, where you can go in and kind of see our gold class, our option pit live, kind of what we do, how we talk about the market, how we break it apart. how we set up trades. I mean, the way a lot of what we do is kind of like having a, working, as a trade desk, essentially, something we had back in the day, Mr. Longo, and, just a real good free exchange of ideas. And the only way really to see how that works is if you actually come in and see how it works. So we're going to have a guest pass, and the date is, I'm pulling it up right now, is July 17th, next week. So you can come into the pit report, see what's going on, and see if you like how we discuss the market and how we evaluate, our strategy letter, trades, and how kind of our whole, what we call just the option pit method works in running a volatility book.
I like it. You guys are like the risk managers for retail. I like it.
Kind of. That's sort of what the business has become. I think it's done our clients a pretty good service. They have ideas. Sometimes between Mark and I, we reshape the idea in a way that's a little more, has a little less risk and a little more reward, which is generally what we're pretty good at doing. And we also run a book, live, our strategy letter that people can follow along, and they can see how you can start to put these trades together. So it's not one trade is an all or nothing event. You're leaning more on the way that options work in order to structure trades. So it's, the business is growing. It grows every month. So our clients are happy. So I figure, as long as everybody's happy, we're doing an okay job, and we get, we get feedback every day.
As long as they're paying the bills, you're a happy man, right?
Yeah, and it really, I think it's a good opportunity too for people, especially for free for a day, to kind of check it out and see what's going on.
If you've been listening to the show for a while, you like what you guys have to say, then surf on over and check it out. I should remind all of our listeners that we've been talking about metals a lot. That's not a metals trading course. It is the gold level course.
Exactly. It's the gold level course. It is not trading gold course.
Don't call up on gold options and GLD, because you shall be disappointed. That's another webinar for another day. Speaking of another webinar for another day, Mr. Alex, I know your July 3rd webinar was a great success, hopefully due, at least in some small part, to this show. What else do you have cooking over there at OX for our listeners?
This show has given me celebrity status now. I've got to wear sunglasses when I walk out of the building. Excited to have Henry on the show on Monday. I know Henry's going to want to talk about Trade Alert, but we need to get Henry to talk about running the index book at Solomon Brothers, running the index book at Bear Stearns. If we have time Monday, we got to get Henry to talk a little bit about way back when there were big books on the street. Around here, very full webinar schedule. I'll just showcase a couple of them because I know everybody's going to be looking at earnings next week. But Tuesday, Joe Cusack, our head of education, is doing one of his building blocks of options webinar. Wednesday, Leaps is a stock replacement. Great idea if you're a stock trader. And one of the things we're going to build out into Ideas Hub in future months is calendar spreads using Leaps. Wednesday after the close, I'll do Ideas Hub again. And Thursday, futures and futures options. All events are free. Just come to optionsexpress.com and click onto the Education Center. But I'll go out on a limb here and say if earnings are good, we're going to get some big moves in this market next week.
All right. Thank you for that, Mr. Alex. And unfortunately, that is indeed all the time we have for this episode. I want to thank all of you for downloading and streaming and subscribing to this program and making it such a success. And, of course, to Neal and everyone who wrote in. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.